If you're new to investing in Canada and don't know where to invest your money, or you're looking for really solid dividend ETFs where you could get monthly payouts, then stay tuned because I'll be sharing with you my top 4 dividend ETFs that I personally saw really good returns on, as well as really good payouts on a monthly basis. Hey guys, welcome back to my channel. My name is Gabrielle, and for those who are new to my channel, I am a tax manager at one of the big 4 accounting firms. And here on my channel, I like to talk about everything money and finances for the millennials out there, as well as for young professionals. Today, I'll be going over top 4 dividend ETFs that I personally like to have as part of my own portfolio and that I've seen really good returns on, as well as really good payouts on. And it's something that I like to have as part of a balanced portfolio of dividend ETFs, other index fund ETFs, stocks, as well as options. So this is something that I like to have for the long term and that I don't plan on selling anytime soon. And it's just one of those really solid ETFs that I could have for life and that I could eventually see really good growth in over the long term. Obviously, I can't guarantee everything, and based on the stats that I'm going over today, I do feel that there are a little bit overpriced. Maybe the whole stock market is a little bit overvalued at this point, that we've had a really good run, and I personally don't know how long this is going to go for. And it's not really surprising if there is a correction or a little bit of a dip later this year or next year. But one thing that I really recommend is to do dollar cost averaging and put a bit of money in every single month or on a consistent basis, and then have enough cash on the side in case there is a really good buying opportunity where you could buy a bit more than your usual buys. I still think that these are really good buys anytime, whether it's now or later, and I continue to buy these investments. And obviously, I'm not a financial advisor. This video is just for informational purposes only and to kind of educate you on what sort of dividend ETFs are out there. And I'll just be going over the stats so that you could kind of see what to look out for when you're buying ETFs and how to sort of read these stats that might seem a little bit confusing on the websites. So anyways, without further ado, let me jump right in and tell you guys what these 4 dividend ETFs are. So let's jump right into what the ETFs are. Excuse me if I'm looking off to the side because I'm actually looking at my computer screen to kind of go over the details with you. Here, the very first ETF that I like to invest in is XDIV. .TO. TO stands for the Toronto Stock Exchange, and what it stands for is the iShares Core MSCI Canadian Quality Dividend Index ETF. And you can see that it currently is $23, which is not bad at all. It's a really easy entryway for beginners to invest in. I know that some ETFs can be pretty expensive, ranging up to a couple hundreds of dollars, but this is a really easy entryway. If we were to go over the details here, let's start off with the average annual. The 3-year average is 8.98%, which is not bad at all. And the year 1 could be a little bit misleading, it's pretty high. But if you were to look at the individual years starting from 2018, you could see that 2018 was generally not a very good year, and so you could see some losses. 2019 was a pretty good year, and then 2020 was not a very good year because of the pandemic. So on average though, you could see a positive return, and this definitely beats inflation. So not bad at all, pretty good actually. And keep in mind that we're going over dividend ETFs. They're not for big growth or anything. They're more for consistency and stability, and most importantly, getting your monthly dividend, getting that monthly dopamine hit when you get those payouts. So that will sort of be more of the focus of this video, not like crazy growth. So keep that in mind. Moving on, now let's look at here. You'll notice that the inception date is 2017, and that's why there's not as much historical data when it comes to the returns. So just keep in mind, it hasn't been around for a long time, but later you'll see that it has pretty good holdings. And just moving along here, you will see the distribution frequency. So you get payouts on a monthly basis, which is great. Unlike other ETFs or other stocks you might be investing in, you won't get monthly payouts. You'll get maybe quarterly or annually. So this is really great. Also, you'll see that in the past 12 months, the dividend distribution was around 4%, and then the distribution yield was 3.89%. And so this is pretty good keep in mind this is on an annual basis, not on a monthly basis. And you could see that this is net of any expenses or management fees. The fees is on the low end, it's only 0.10%. And I would say for Canadian ETFs, this is pretty, on the low end. This is good to know because your returns won't be affected that much by these expenses. And if you invest in mutual funds that are held by banks, they charge up to 2%, which is crazy high when you think about it. It means like whatever returns you make, 2% of those returns, which is equivalent to the annual inflation, gets taken out of your return. So one of the things I like to look at are management fees. So just keep that in mind when you do your investments and when you do your research. And now if you were to look at the top 10 holdings, you'll see that a lot of them are to do with financials because here in Canada, we have a pretty strong banking system. It's highly regulated and it's very stable. And I know this may seem like it's highly not diversified because it relies a lot on the banks, but if you are looking for higher dividend payouts, that's sort of the industry that you'll be looking at. I have trust in the banking system here in Canada. I don't think they're going to go under anytime soon. If you believe in the banking system, then these are some of the holdings I like to have. Obviously, not everything you own should be related to financial, but in terms of dividends and having a balanced portfolio, I definitely like to have banks in my portfolio. So you'll have a lot of banks, some energy. The top one here is TC Energy Corp. And you'll see utilities, Fortis Inc., they're pretty massive, they're pretty stable. And you'll see here, even the breakouts, financials consist of 57%, followed by energy, utilities, materials, communication, and a little bit in cash and or derivatives. So overall, I think this is a pretty solid dividend ETFs. And if you are looking to have consistent dividends on a monthly basis, this is one of the ones that I recommend. Now, moving along, the second dividend ETF that I like to invest in is the XDV. As I mentioned before, if you're looking it up on the stock exchange, is XDV.TO. And this one stands for iShares Canadian Select Dividend Index ETF. So you can see right in the name that this whole ETF is centered around receiving dividends. Now, going over the similar stats, the average annual here is 11.7%, so slightly better than the other one we just went over. And you will see that this has been around for a long time because you could see even up to 10 years. And the 10-year average is 8.35%, so pretty good. The 1-year average is 40%, which is kind of crazy. If you look at the calendar year, you'll see that in 2020, they've, pretty much just netted out zero. It's very insignificant at negative 0.51%. This is obviously, where the pandemic happened, so it didn't do too well. But you will see that in 2019, it did pretty well, 21.25%. And in 2018, it did negative 12.49%. So not so well in 2018. Now, moving along, you'll see that the inception date is 2005. So it has been around for a really long time compared to the other one, which was, I believe, 2017 or 2018. So fairly new. The bench index here is the Dow Jones Canada Select Dividend Index. So a really big one that they're trying to benchmark against. And even the price, I forgot to go over it, is $29.99 currently. And that's really good entry point as well. It's not a crazy, number, like a few hundreds of dollars to get in. $30 is a pretty good starting point if you just want to buy a little. The distribution frequency is monthly, which is great. So you get a payout on a monthly basis. And then the 12-month trailing yield here is 3.64%. And then the distribution yield is 3.96%. Moving along, you'll see that the fees are slightly higher though. It's at 0.5% compared to the 0.10% that we saw earlier. We also noticed that the returns were slightly better. So maybe it can be justified. We saw that the annual 3-year was 11.7%. The other one was in the 8% range. So maybe it's justified. So it's like these things you kind of have to weigh. The top 10 holdings is mostly banks, so no surprise. The first one being the Canadian Imperial Bank of Commerce, Canadian Tire, which is really big here in Canada, a lot of banks, some communication, energy, and you will see even in the breakout, the exposure breakdowns that the financial is 55%, so slightly lower than the other one, followed by communication, utilities, materials, commercial discretionary, energy, and industrial. So This one is very similar to the other one. It's a little bit different in terms of the breakouts and like what sort of banks that they've invested in, but in terms of the overall kind of feel, if it's heavily invested in the financial sector and they focus mostly on providing dividends for its investors. So moving along, the third one is XRE.TO, if you were to find it on the stock exchange, which is the iShares S&P/TSX capped REIT index ETF. So this is a little bit different from the other two that we looked at, which focus mostly on the financial sector. This one focuses on real estate. And so if you want to invest in real estate, but you can't afford to buy a property, this is a really good entryway because basically it's a selection of real estate properties across Canada that collect rent. And so I personally like to invest in REITs if you believe in the real estate market. This is also a really good entry point at Canadian dollars of $20.16 currently. And if we were to look at the performance, the 3-year average is 9.11%. And if we were to look at the calendar year, it was negative 13.6% in 2020. Real estate obviously didn't do so well during the pandemic because of people not being able to pay rent and all that. So it wasn't a really good year, but you will see that in 2019, it did 22%. And then 2018, it did actually decent at 5.76%. So slightly different. You'll see the other financial sectors they had negative returns in 2018, whereas this REIT one did actually make positive returns. Now, moving along, the inception date, it's 2002, so it's been around for a really long time, so it has really good historical data in terms of how well it did. So you could see that the distribution frequency here, again, is on a monthly basis, which is great. The dividend distribution is slightly lower than the other two that we looked at, is 2.74%, and then the distribution yield is 3.04%. So this is more based on recent payouts. If you were to annualize that would be a little bit higher than the trailing 12 month. Now, if we were to move along here in terms of management fees, it's a little bit on the high side, 0.55%, but nothing too bad if you were to compare it to management fees that you would pay for mutual funds. The risk factor, I don't know how relevant this information is, but it's medium. I believe all the ETFs that we looked at so far were medium risk. And then you will see that the top 12 holdings are obviously all real estate. The first one being the Canadian apartment properties, which is really huge, really stable. And then you'll see a whole bunch of other real estate related holdings. Obviously, if you were to get a breakdown, most of it, 31% is related to retail, 24.45% related to residentials, and then followed by industrial, diversified, office, healthcare. I like to have this as a little bit of diversification in my dividend ETF portfolio. And it's not too high, but it provides monthly payouts. So I find that was really stable and something that I could look forward to. Last but not least, the fourth dividend ETF that I like to invest in is the ZWB BMO Covered Call Canadian Banks ETF. This one is a fund of a fund. You'll see that here in the holdings that it mainly invests in its own ETF called the BMO Equal Weight Banks Index ETF. But the difference here is that it earns premiums on covered calls. So if we were to look over its stats, you could see the format is a little bit different from the other ones that we looked at because the other ones were iShares. This is a BMO one, but you could still find the same information. You'll see that here in the price and performances. So you'll see that the 3-year is 7.88%, which is, not bad. It's a little bit lower than the other ones. Let's see for calendar performance. You'll see that in 2020, it didn't do so well. 2019, it had returns of 14.27%. And then 2018, it didn't do so well either. It was negative 8.08%. But keep in mind, we're looking at this for dividends and not, crazy returns. But that just gives you, an overall good feel of how well it does over time. And the important part is that it beats inflation. So not crazy high returns, but pretty decent returns for beating inflation and having something in your portfolio that, you know, grows over time but also provides you with dividends. Now, talking about dividends, you'll see that this one provides you the highest distribution yield compared to the other three, and this one, the past annualized distribution yield is 5.8%, which is really good. And I was definitely able to see in my portfolio that this particular ETF paid out the most on a monthly basis. I believe this is monthly. Let's take a look. Yes, so distribution frequency is on a monthly basis. Now, if we are to move on to the management fees, it's the highest out of the other three that we looked at. You'll see that the annual management fee is 0.65% and the MER is 0.72%. And maybe it could be justified by the higher dividends that you receive. And keep in mind, like I said, this is a fund of a fund, and part of its earnings are from call option premium. So they take on a little bit of risk, and which kind of explains the higher management fee. Now, if we're looking at the top holdings, as I mentioned before, it holds its own ETF called the BMO Equal Weight Banks Index ETF, and the rest is mainly consisting of banks. So the Canadian Imperial Bank of Commerce, Bank of Montreal, National Bank of Canada, they're all banks, as you can see. And like I mentioned before, it is because banks offer the biggest dividends, and they provide also the most consistent dividends based on historical data. And, you know, unless you think that the banking industry is going to collapse anytime soon, I think it's a pretty safe investment, but that's my personal opinion. And obviously my portfolio isn't 100% made up of Canadian banks, and I don't have all of my investments in these bank ETFs. I have a diversified portfolio where a part of it consists of dividend ETFs, and within the dividend ETFs, part of that consists of banks. So please keep that in mind and not, you know, invest all your money in these dividend ETFs. It should just be part of a diversified portfolio. So those are my top 4 dividend ETFs, and I hope you guys found my video useful today and that you learned and got something out of it. If you guys enjoyed these sort of videos, make sure that you hit the subscribe button as well as the notification button so that you can be informed of future investment related videos that I'll be making, which are going to be extremely friendly for beginners. The next video I have in mind are top 5 ETFs that I will be holding for life. So not necessarily, you know, you might not be receiving dividend on a monthly basis, but these ETFs, you will see more growth and more capital gains in the long term. And so I'm really excited to share with you what those 5 ETFs are. If you guys watched until the very end, thank you so much for watching, and I'll see you guys in my next video. Bye!